Tedeschi, Wealth Management Advisor at Perspective Wealth Planning with this week's market breakdown video. As always, if you guys like this content, please subscribe to our channel so you can see it on a weekly basis. Getting into it here, we're going to take a look at the four major U.S. indexes. We're also going to take a look at the dollar. We'll look at some breadth readings. We'll take a look at oil, and we will also take a look at the precious metals. So let's jump right into it here. First and foremost, the market pulled back, and we've been talking about this a lot here over the last couple of weeks, but it did not break major support. We had that 3,200 zone, which we could see is really important from going back to June and also in July, and this was the zone where we really wanted to see the bulls ultimately hold here on the S&P 500 this week. We opened, and we have subsequently risen throughout the course of the week. Even after the presidential debates, we still continue to head higher, so the market was not spooked by that this week at all. We're still watching this major resistance level now here just above 3,400 as the key on the upside. If we were to break above this zone, then we would be looking at that all-time high resistance zone. If we were to fail here, once again, we would be watching this 3,200 in terms of support. So those are the levels that we're really paying close attention to. We'll take a look at all four of the indexes. We can see here the lines that we had drawn last week in on the Nasdaq. We held this 10,750 zone, and our resistance is just above current price over that 11,500 area. So that's what we've got in on the Nasdaq. When we take a look in here at the Dow, right? The Dow didn't fall all the way back down to its major 26,000 support zone, so held up there, and it is back up over this important level. So we're now actually looking back about 28,500 is the main level there in on the Dow. Still have not made a new all-time high here. So again, same kind of sentiment that we've displayed here over the course of the year in terms of the Russell and the Dow being the weaker of the indexes. The Russell actually broke below that 1450 level, but was able to immediately get back above it and is now holding over that 1500 level. Really the next important level comes in at that 1550 zone. So we'll see if we can break above that and then get back towards that 1600 or those highs from last month. Again, no new high there out of the Russell, so we are continuing to watch this pretty closely to see if we get that leadership to the downside once again on a failure here, or if we can kind of hold on and continue to grind up. Now, when we take a look at the emerging markets next, the emerging markets, we've talked about that key zone right in here. Look, it held that major gap all the way back down to that 1,020 zone, subsequently bounced back up, but it needs to get over this. You can see the resistance that was in place here and the support that was in place here. So we're really watching right where we're at and see if we can't get a push back up. A move over 1,100 would be good. We really need to get over that 1,140 or the high from earlier this year to get that continuance out of the emerging markets. Now, the U.S. dollar, which we paid very, very close attention to, and we've analyzed this chart a number of times, had a very strong cup kind of put in breakout, but it ran right into this resistance zone, and we laid this out as the area where the dollar bulls did not want to see it fail. Subsequently, earlier this week, we ran right into that zone, and we subsequently turned back lower, and we're almost back right below that breakout point. So this is still in a downtrend being defined as a series of lower highs and a series of lower lows, which we still have in play. So for the dollar here, what we really would want to see if you're bullish on it would be a move back up above this to kind of negate that, and if you're bearish, of course, you want to see a move below here. But right now we are right at that key zone. You can see in August we had a couple of week-long battle right here at this level. So what happens here is going to be important. So we're going to continue to pay close attention. And of course, what happens here is definitely going to have an impact in on precious metals. So let's first take a look in at silver. And I want to back this up to a monthly chart so you can see where this line is coming from. The really, really key kind of important zones around that 2150 level. When we look at this chart goes all the way back to 1990 back in over here. So we're looking at decades of data. In 2008, that high zone was right there. And that is where we hit, and then we ultimately fell from. And then you can see the importance again right into 2013, 2014, and then again right here in 2016. So this level right here is very, very key, and we got that push above it here earlier this year. Then we had that weakness here over the last couple of weeks, and it tested that zone and subsequently has bounced up. So we are really watching what happens right here at that 2150 zone. A move below it would then target the smaller term breakout spot of about 20. But as long as it can kind of hold up above that, it's holding over a key level that's been in play now for 20 years. And so we would continue to pay attention and look for more upside follow through here. On the short term, we're back in on a daily chart now. Really what we're looking at is a move back up over this 2450 zone would kind of get us a target back up into that 26 zone. A failure here again would kind of push us back down towards that 2150 zone, and of course if we failed underneath of that, we just talked about those major levels. So that's kind of what we're looking at in terms of silver at the moment. We come in here and we take a look at gold. I'll back this one out in a monthly chart as well. As you know, this line is that all-time high monthly closing price of about 1830. That's where that level came from. We came right back down into that zone and subsequently held it here this week, and subsequently have made a bounce back up back over that 1900 level. So we're going to continue to watch that, but we fell right into what should have acted as support and essentially did, and subsequently have made a little bit of a bounce back up. Now if you're really watching this right here, you really want to back over about 1925, and then you get that target back towards that 2000 zone. We could look at it like this, where we have that potential bull flag that is set up, held the key breakout spot, and now is kind of continuing to still coil. So we really will be watching this closely because it does have an interesting setup that subsequently could see some follow through here to the upside. Just needs a little bit more of a push, and of course what happens in on the US dollar is going to be very important. Last commodity I want to take a look at here today is going to be oil, right? Oil, this line that we have on the chart is that gap down from earlier this year, okay? We came back up into that zone and we slightly grinded above it here in August. Then we quickly fell back below it, and look what we've done. We've back tested that level, and that is where we have not been able to get back above. So that 4150 zone is very, very important. The support zone being that 35. So the way I'm viewing this right now is we're kind of trapped inside this range, and our next move, whether it is up or it is down, is what we're really going to pay a lot of attention to. Underneath 35, I think we get that 2750 zone, and above it, I think we could get all the way back up to that 4750 zone, which would be that important resistance zone and the previous support zone from February and March of this year. Now, the next thing I want to take a look at in today's video, I would like to take a look at some breadth readings. We have continued to talk about this. Where breadth readings failed to continue to push higher was back from early 2019's resistance level, where we started to see that sell-off. So even as the Nasdaq has continued to head higher, we have not had that participation from everyone. And over the last month or two, we've really fallen back down. And this is something that we talked about as a reason why we could have seen a pullback, which we subsequently have over the last couple of weeks. Now, what we want to look for is we want to look for that to cross back over so that we can get sort of a potential bottom type of zone. And if you look at where we're at right now, we are at a key zone on this from the middle of last year, from the May, and the August and September, and then also that October zone. And we are starting to make that crossover. In fact, we did make that crossover this week with the breadth thrust that we had at the beginning of the week. The question, of course, is does this follow through to the upside, or do we get another little zone like this where we have a brief crossover for a day or two before continuing to roll over? Basically, what we're looking for here is a couple of days more of follow through. If we do get that, that would be a very good sign for the overall market, as this was a short-term pullback and now we're kind of grinding higher. So we're going to continue to pay very close attention to this, but this is an interesting setup that we got right here for a potential zone of breadth bouncing. Now, the last thing that I want to discuss with you guys is the election. We are just a little ways off here, about 5 weeks out. Historically, we see the market kind of sticking about a 10% range going in there with a bunch of choppiness, right? If the market is expecting one person to win and the other person has something good happen for them, and those odds kind of switch, you can get some oscillation here in the overall market. So we're probably in a zone where we're not going to have a major breakout or a major breakdown until after that election. We probably are going to end up holding this 3,200 zone. We're probably not going to go make new all-time highs. We're probably in that kind of range here for the next few weeks. Of course, as always, with technical analysis, we're paying attention to those levels. If they break, we're going to, obviously act on that accordingly, regardless of what's going on politically, news-wise, etc. But historically, what we're probably looking at is we're probably trapped inside that range until after the election. So we're going to continue to analyze everything here over the next few weeks, but I would not be surprised to see us just kind of chop sideways here, not really accomplish too much as the market kind of really waits to see the direction that the country leadership is going to take here over the next 4 years, which of course is very important for the markets. As always, guys, if you have any questions, comments, you want to reach out, you can reach me at Tedeschi at perspectivewealthplanning.com, or you can give me a call at 814-580-9881. I would be more than happy to talk anything about the markets with you guys. As always, we'll see you next week. Take care.